Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and, as always, profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com, and we are going into today's action Thursday, March 6th, 2014. Right now, markets are mostly higher. NASDAQ's down 4 points, but the Dow is up 80 points, S&P up about 5 points. So again, you have a little bit of a mixed market, but for the most part, the indices are higher. Now, one thing that caught my eye just a little bit ago is we are seeing biotechs taking a pretty sharp beating, and if you want to check out what the biotechs are doing, just look at the biotech ETF, the IBB, and take a look at that rollover today on the IBB intraday. So that right off the bat catches my eye. Now, why does that catch my eye? Well, number one, you have to remember that the biotechs have led this market up. They've been the bubble kind of territory thing out there. They've been the one going up the most, and sure enough, we are seeing a little bit of a collapse today. Now, whether or not we take out last week or early this week's lows, I think that's going to be the bigger question. If you look at the daily chart, you can see the pivot low is right here. We haven't taken that out yet. What you want to see is a close below the 20 and a takeout of that little pivot low, and then that's really what's going to kickstart, in my opinion, the selling. All right, that would really kickstart selling. And again, if the biotech start to collapse, it's my belief that the overall market will start to collapse as well. All right, so that's just one thing that was catching my eye. Flipping back to the SPY, let's go to just the daily chart here. Yesterday, we got a little bit of a doji on the daily chart. Today, we're actually getting another one. Markets, again, very quiet today. Unbelievably light volume. We've only done today, get this, 58 million, and it's basically 3 p.m. Eastern Time. And this is on pace to be the lightest trading day of the year. Now, why? Well, because the whole Russian-Ukrainian situation seems to have died down a little bit. And then we also have, and this is where it gets interesting, we also have the jobs data tomorrow that the market's waiting for. So traders, after a wild Monday and Tuesday, you paused on Wednesday and now are pausing again on Thursday, waiting for that jobs data tomorrow. Now, the jobs data is kind of interesting. I have a hard time believing that the number would be bad enough to really cause a drastic sell. Now, I think if we are going to sell, and I think overall the markets are ridiculously overbought. Even Fed Fisher came out last evening, after I talked about it to my members, and he was talking about how the markets are in bubble territory up here and overbought. But the point is, markets don't necessarily reverse, as we've seen with Greenspan in the mid to late 90s when he said it was irrational exuberance. The markets didn't reverse right away off of his comments either. So it doesn't mean the markets are going to reverse, but they are in that territory. And I think that's kind of one of those warning signals that as investors we need to pay attention to and just be aware of overall. So just something to watch there. And again, what you saw today is a gap up on the markets. We made a 3-bar little move up here, 1, 2, 3, put in a little bit of a pivot top, backed off, moved back up to that same level, couldn't get through that level again, backed off, had a little sell-off to new lows of the day, almost to gap fill, and then have made a little bit of a bearish pattern here. So this would be considered an in-spirit of bearish pattern on the spiders. Now, do we have enough volume to see any selling into the close? It's doubtful, I think. And again, the volume is just so light, it's very tough for the markets to roll over, especially with the buy the dip mentality that's out there. But one thing I was going to say about the jobs numbers is that everyone's expecting a poor jobs number. So if it's poor, they're going to say, oh, it's because of the weather. So it's going to be discounted anyways. And then if it's a good jobs number, what you're going to end up seeing is the fact that they're going to say, oh, well, it's better than expected. This is great news. So I don't think the jobs number per se will be the catalyst for selling, even though I think we're due for selling. I think it's going to be more like a surprise, maybe something out of the Ukraine. I think the Chinese issues are very big there. So I think China, the subprime shadow banking issue, any sort of collapse. In fact, I was just reading that, I believe, last night in an article that there is a major player in China that's about ready to go under. And again, it's kind of the beginning of the domino effect. That's what they're estimating. The media here in the U.S. has not talked about it at all, which I think is well, I guess I'm not surprised at that in all fairness. But they just haven't talked about it. And I think when it hits, it'll be somewhat of a shock to a majority of the market. Okay, so that's what we have going on there with the SPY. And again, the SPY is trading slightly bearish here in the afternoon with a bearish pattern. But the question is, again, would I be negative on it based on the volume? No, it's hard to be negative on that. Okay. Again, IBB remains, the biotechs remain kind of the weakest sector out there. Aside from that, let's just take a look at a couple other key stocks today. Chevron and Exxon took a hit yesterday. Exxon's bouncing back a little bit, but just up 25 cents. Nothing really there. We have ExxonMobil, excuse me, that was Chevron. Now we're looking at Exxon. Exxon's actually down slightly, but it's off its lows on the intraday chart. You can see it actually just had a little bit of a move up here and is now pulling back. Still down on the day about 16 cents. Apple today. Apple's weak, down $2. Now, the markets are generally up, but Apple's down. Why? Well, I explained this in the previous couple videos over the last couple days, and the reasoning behind this is pretty simple, folks. Basically, what you're seeing is Apple become a contrarian play. So when things get very scary out there, people are running into Apple. They're buying Apple because they know, listen, it's Apple. It's a strong company. Very unlikely they're going to really do too poorly on any quarterly announcement. They pay a dividend now. So it's becoming more of a safety play. And that's why if you go back to Monday's big down day in the markets, Apple was actually flat on that day. And then since that, on the bounces, Apple's actually well underperformed the market. Because, again, money's coming out on the bounces, going into riskier, higher return assets like stocks that'll have more velocity to the upside. So just keep that in mind. It's kind of a weird switch over we're seeing more so than anything here on that stock. Okay? What else do we want to take a look at? JP Morgan Chase. Financials continue to be one of the strongest sectors. All right, now, for a while they were the weakest, but they've really, over the last 3 days, galloped back, come back very strong, and have moved up dramatically. So we are seeing them move up there, and with a very, very nice move. Goldman Sachs, let's take a look. Goldman's up another $1 and change. Goldman daily chart is not too shabby to look for a short in a little while. I don't think it's there yet. I think this is your level right here on Goldman. All right, if it gets up to this range right around the 176 level, which is only $3 away, which could happen if we get a rally in the next few days, then you start saying, all right, now this looks like a good scenario for a potential short on Goldman Sachs. Okay? Trying to think if there's anything else out there of interest. All right, if there's anything else out there of interest. I'm not seeing much else here. And let me just see here. Scanning through. I think that's about it. I'm trying to look and just see if there's anything else popping on the radar, but I'm not seeing too much here. Just going over a couple other key names. Amazon, we talked about Amazon yesterday. Amazon's up 50 cents on the day, nothing really going on there. It's going to start to meet a little resistance here at the 50 MA. I think the bigger level on Amazon will be right here, though. All right, this will be the bigger one right there. And, of course, let's take a look at Baidu, the Chinese player here. That's having a big day, folks. And, again, look at this. Here's your double top on Baidu, and look at where it went to this morning. So this is your daily chart of Baidu, folks. $10 move up or a 6% move on Baidu, right to the double top, and that's where it's backed off. So these little things you want to pay attention to, in my opinion. I mean, they are important. You see double tops, generally that's where a stock's going to go and run into resistance. All right, I think on that note, let's just go back to the SPY. Again, markets for the most part unbelievably quiet here. SPY up 54 cents on the day if we flip back to the intraday. Little bearish pattern still in there, but again, and I want to stress this, even though you have a bearish pattern doesn't mean the market's going to fall. In fact, based on the volume, I would think it's somewhat unlikely. It could happen. It's telling you that there's a possibility of that, but it's telling you that based on the volume factors, which are insanely light, 58.7 million right now after 3 p.m., that it is unlikely to see a sell-off. So just be aware of that. You want to be kind of recognizing that as you don't want to put yourself in a poor position unless you're sure it's going to really sell. All right, now I would say if you start to dip on volume, if volume comes in, you start to go down, well, then that's a different story. Then the pattern probably plays out with volume. Okay? All right, guys. On that note, I'm going to step aside, but it's always a pleasure to be with you. Come join us here at InTheMoneyStocks.com. And again, take the 7-day free trial to the Research Center. Research Center. Take care.